Welcome to TradeTheMBI.com. This is John. This report is for the 20th of May. We had another typically average day the other day where made new highs, faded off them as the 100% meets price. And this is what we talked about would happen. It was just a question of how far up we would get from it. We knew that we were going to catch some just pausation here as we were in this range just above the key algo levels, and every time there's any significant amount of selling, it's being bought up separately, and it's consistent with what we had with the dip down here and then the rising. Now we've got a little bit of fade of short-term buyers after the little bit of dip, but we've still continued rising right into a new zone, green, as well, and a little bit more short activity, which should help fuel to that ultimate high. In pre-market, we're already seeing significant move. NASDAQ again making new highs that had already reached its level, so that rising shakeout after the reset, perfect from that standpoint. Euro still within this beautiful wave range with the excitement of Europe reopening, but I can tell you I went out the other day just to see what it was like, and I don't know, I just don't see people actively wanting to pursue that kind of situation where, I mean, literally you show up at the door. I'll give you an instance. We went to Apple. They've got this giant poster out there. They ask you all these questions about if you've had fever, cough, then you've got to get your temperature taken, then you put antibacterial hand sanitizer on, then they hand you gloves that you have to put on. Of course, you have to wear your mask, and you're supposed to want to shop in that environment, and you have to do this every single store you go into. It's really inconvenient, not a hospitable kind of event, and I don't know how interested people are going to want to be, engaging in that kind of activity. When shopping experiences were typically intended to be, a pleasurable experience, it certainly isn't. So I don't know if that's going to play out the same in the U.S. It doesn't appear to be as stringent as it is here. So I think the chances in America are better if you get cooperation amongst states as well as uniformity. The disparity of the way things are going is going to create, like we talked about this weeks back, those states that have opened up early and are doing things are going to way outperform the other ones that don't. And it's going to be interesting, especially leading up to an election. I think there's going to be a lot of blowback from it. So I think as the summer heats up, the politics of this is really going to cause a lot of interesting aspects, and that will impact the market. And that's what we're really looking at. Again, we're focused too also on oil and whether or not it really is able to break past this low range from here. We had that super dip, but now we've pretty much stabilized. At this point, it's at 50% on the Morganacci, but still a depressed level. And as long as it remains, down in these levels, you're not going to create an inflation. It's if when you get into the 1560 range, that would be a huge change that will certainly push the bounds of inflationary pressures. We're seeing dramatic food price increases here in Europe, like 30-40% in some cases. So those kinds of effects will compound themselves inflationary wise, and we could see a global inflation that could be very interesting, not from a positive standpoint, that's for sure. Gold back to its highs as well, and that is a reflection of this money printing. There will be cause and effect. From a cause effect standpoint, very simple for us to see these. We start moving, you break out positive extreme, and as soon as the OC spread comes in, you get the fill of the positive extremes. In this case, you got a little bit extra with the dip below the red line, or as we say, negative extreme. And once that low hit on higher extreme, even though you didn't have the reset, we had the building of red DOC, so it wasn't quite enough to create a huge catalyst, and this is where that failure of the reset really inhibits bigger moves. We did end up with Sigma event on this little dip that came down, but then it produced a nice turnaround uplift right there. And that actually produced a little bit more. We did end up with the dip of the steel below the red line, and that was enough to push it to the 100%. But again, those DOC spreads working out beautifully, particularly coming after those positive extremes and filling them right back in. I'm just kind of producing that back and forth wave action, which even from this short here, as much as it continued along, it still ended up doing the general net effect, which was basically to fill back in towards this dip below the red line back over here. And as we proceeded through the day, it filled that one in, created some new ones, but then it kept filling them as they went down, and then we ended up with much higher extremes at the end of the day as we moved into the new one in the beginning of the open session, and that left low liquidity and an easy opportunity to press price. Orange line dip right there, and then boom, powered it up. Very soft read there. There was no spike above and below, so you can see even though you had the DOC spread, you knew based on what we were looking at here from the Power 2, without that pop above within rising gold was enough to hold it on, and that's where we're at new highs. So it's just more of the same clean, simple action. I don't think that we're going to really start to get a break in the momentum of things until we start seeing a complete uniformity in open, and then people are going to be having an expectation that real earnings and growth should come from it, and of course, obviously, the impact of any vaccines or related thing. The fact the president came out with this use of hydroxychloroquine in that, and the subsequent studies, I mean, from places like Costa Rica and things like that, where they've been using this all along, and there's just so many other places around Europe and that have been. So it's just interesting that you're seeing such a pushback in American media that just isn't happening elsewhere. It's kind of a strange thing to see. So we'll see how it plays out. But at the end of the day, the case mitigation in the U.S. has been fairly effective, and can't see why you're not going to see more and more pushback towards normalcy to some impact. The question really will become how many businesses can reopen versus not, and how many are lost permanently. And I think that is where the market will start to make some real determinations as to whether or not there's a justification. But even still, the justification is literally wherever the Fed decides to be the base support level, and we pivot from those. You're only going to be able to bid one way, which is above it, until they get enough move. And that's why we're just seeing these the dips. They can just add in at those other higher levels and just keep pushing it up. I mean, as we're pushing 3,000 here, there really isn't any economic justification for it other than, like I said, the devaluation of the dollar, and the market always takes that into account, and that does not make this unjustifiable. At least that's something I've been talking about since this all started from a rally standpoint. You cannot fight the Fed. It is too powerful. So we'll just keep going with what is, and as always, if there's something unique, this has all been pretty basic, clean stuff. We'll put it up on the Skype chat. Trade well. We'll talk to you later.